Oh, hello. All right. There we go. Audio's good. Camera's good. Still moving some stuff around, but we're getting there figured out. It's 8 a.m. Just shy of actually 7:50. Got my coffee. Welcome back to another episode of the Hizzy Hustle. I'm your host, Tyler Heisman here, also known as T Hizzy. Licensed real estate agent here in the Okanagan with the Heisman Group and Oakland Realty. Yeah, not too much going on today. Just a little bit more of a dive into the rate cuts that we had yesterday. Yeah. So, first things first, let's go take a little bit of a dive into these new listings. We got 47 new listings, 10 price decreases, 12 sold, and 21 cancels. So in the last 24 hours here in the Okanagan, Penticton to Revelstoke pretty much. It's a pretty big area. I think we're sitting at close to like 6,500 listings or 7,000 listings or something like that. So yeah, things are moving, but they're not moving too fast. But new listings coming onto the market, that's a good sign. It means that sellers are a little bit more optimistic, hopefully, coming into the year. Just to touch back on the policy rate from yesterday, we're down to a 3% policy rate, a 1.8% total CPI inflation. And this is what I was talking about yesterday with the CPI trim and the CPI minimum. I don't exactly know much about inflation and how that stuff all works. So they say it's around 2%, and I'm assuming it's plus minus a few points or partial points or whatever. Yeah, another one. This is a good article as well. Aleb. I don't know if I pronounced that correctly. I noticed this doesn't happen as much either. People tend to stay put more often. Like growing up as a kid, in a 10-year period, I remember moving 2 or 3 times. Like, people moved quite a bit, I feel like, back in the day. Yeah, it's just been steadily declining over the years. So there's been a decline in households moving each year. People are just, when they get into a place, they just stay there. And especially if the areas that they're moving to become more demanding, like, Calgary, for example. Calgary and Edmonton had a ridiculous market post-COVID, even into this year, because, everywhere else was getting so expensive that people were forced to go to a place that was less expensive. And in doing so, made the prices more expensive. So now they're going to suffer from the same issue, right? So, all right. Well, let's take a look here. Bloomberg is going to tell us why they think that the rate cuts are likely to revive Canada's real estate sector. So let's take a look here.
Bank of Canada cutting rates again. No real surprise there. Let's get more from a guy who follows interest rates closely. Christopher Wine, Chief Operating Officer at Equiton Developments, a big builder of apartments and condos. And also Beata Caranci, Chief Economist and Senior Vice President at TD Bank Group. Thanks to both of you for joining us. Really appreciate it. Could I start off with you, please, Beata? Was there anything in the Bank of Canada's language that jumped?
Expect to see no more rate drops for the year if the tariffs don't happen. Expect to see another one if they do.
Out for you, any surprises?
Not really. They continue to use very cautious language. They made the point that none of their forecasts currently reflect tariff impacts on the U.S. Of course, we had all expected that they will react in real time as information is known. They did provide a lot of scenario analysis on the different pathways and the complexities in which tariffs hit the Canadian economy, but would not answer which way they would move necessarily with interest rates due to the complexity of the shock that they would have to monitor in real time. So overall, they did the quarter point cut. Very status quo on the forecast, some tweaks here and there, but nothing really of a surprise.
Our Bloomberg colleagues reckon that the language from the Bank of Canada suggests that the bank isn't likely to do more cuts to monetary policy, more to rates, until we know more about Trump's tariff policies. Would you agree with that, Beata?
100% correct.
Well, if you look at the market reaction, there's only about a 50% cut priced in for their March meeting, which basically confirms that everybody's sitting on the fence. Let's wait for greater clarity to move the odds in one direction or the other. So nobody's taking a conviction call right now that, this is absolutely going to happen or not. There's just too much uncertainty. So I think that's a fair assessment.
Christopher, you obviously, interest rates are central to your business, real estate. You think that getting to a 3% level is an important psychological benchmark, possibly for consumers?
I do. I think it really helps with consumer confidence. I think that home buyers have been sitting on the sidelines waiting for getting us.
And this one, I always urge people to look at a little bit more objectively. Like, I totally understand that people care about what the variable rate is doing, but I would say we're just getting to the point now where people might even consider taking the variable rate again. People weren't taking a variable rate over the last 2 years. They were taking a 1 or a 2 to 3 year fixed rate because there was just no point. You knew that the interest rates were going to be coming down and you were waiting. So now that we're finally at that point, it's definitely going to help. But like I say, people act in weird ways, right? They need that. If consumer confidence isn't there, then buying just won't happen. It's just the way it is. So if there is something that makes people feel confident about spending their money, even though it's not the thing that directly would affect them in that particular period, then, I totally understand why people are a little bit more hesitant. It's good that the rate's coming down, though. People need it.
To 3, I think 2.75 will be even a better psychological barrier, but I think starting the year out at 3% really signals that it's time to get back into the market. And if you look at the stats that home sales across the country in November and December were up year over year, so even the rate cuts that occurred through the fall is starting to bring things back.
And that's a big determinant, a big factor for buyers, the rate, the cost of borrowing.
Absolutely, yes. It's a big factor for buyers. It's also a big factor for us in the development industry.
Yeah.
Because we borrow a lot of money, and the cost of money, we have to pass that on to the home buying public. So the cheaper it is for us to build, the cheaper it is for us to borrow, the better it is for housing affordability, and then that gets passed on to the consumer. They can get better mortgages. Now that the government increased the CMHC to $1.5 million for insurance, was fantastic. Now we just need to get rid of the GST.
Oh, so the GST on...
We should have a GST holiday on new home purchases up to $1.5 million. We really need that.
100%. They need to do that. It's just, it needs to happen. I know they say that, like, oh, the goods and services tax, what about infrastructure? What about this and that? There's so much money already in there. They're just wasting it in the wrong ways. They need to invest in the public, and they need to give people tax breaks so that they can reinvest that money into the economy. It's super simple.
We need to, in order to create affordability for people to get into the market, first-time buyers, we shouldn't be taxing houses for first-time buyers.
They've taken the GST off rental, is
they
it?
have,
okay,
but they haven't done it for new homes.
For new homes, thanks.
Correct.
Beata, what is your feeling? How, now, of course, we've heard real estate, or too much of our economy is devoted to real estate. Christopher may have thoughts on that, but in any case, we do have a very real estate heavy economy, so presumably rate cuts will spur some kind of a revival in that sector.
Oh, you bet.
Always.
And as mentioned, it is one of the most responsive areas to interest rates. So on the one hand, the way the mortgage market is structured, we react quickly when mortgage rates go up in terms of it becomes a greater burden to households relatively quickly, more so than what you see in the US. Likewise, when rates go down, we benefit faster from those rate drops in terms of reducing the debt burden and the debt service costs and allowing for that entry point into the market. So
I just feel like
Canada.
that's more of like a knee-jerk response, and I wish they were just a little bit
As DNA,
just a little bit more ahead of the curve or whatever. Because in 2022, when those rates went up, man, that was not fun. That was like in 3 months or something like that, or 2 months, it went from like 1.45 to like 7%. I was like, this is crazy. Like it was too much too
When
quick.
it comes to housing, it is very substantial as a share of our economy relative to what you see in the US and even in Europe, about 2 times the share of the economy. In this particular case, when you're getting threats on the export market and those threats being a disincentive to invest domestically, you have to rely on your domestic drivers, which go back to the consumer and housing. So in this particular case, the timing of the recovery of the housing market and consumer spending, by the way, being quite strong both in the third quarter and in the fourth quarter, ending the year looking like it's going to be about 3% growth. This is good timing to help push against some of the negative influences. So I don't think the Bank of Canada would criticize the size of the housing market at this juncture.
Right. Beata, before we're tight for time, just give us your thoughts on the US Fed, widely expected to stand pat. What are you looking for to hear from Jay Powell this afternoon?
Yeah, so they have a situation where their inflation is just getting stickier and stickier. Their economy remains quite solid, and they're not seeing the downward influence on inflation as much as you've seen here in Canada.
Their prices are also not nearly as high as us. So take that into consideration.
Even though they have a very strong dollar, it's not imparting a big downdraft on prices. So at the end of the day, they are no rush. They have an economy that is tickety-boo. It's just continuing along at a steady growth rate. Inflation is not ideally where they would like it to be. It's not as hot
But
as
they
it
can
used to be,
handle
but
it.
It's definitely not getting anchored to the 2%. The good news is that their inflation expectations are anchored. And so they would be concerned if both the numbers were high and expectations, but that's not the case. They have anchored inflation expectations. So they can afford to wait and see how things transpire. They're in no rush. I think the markets think maybe at most this year we're going to get 2 cuts out of the Federal Reserve. Again,
Agreed.
also an economy that's going to have to see how tariffs transmit into their end prices. So they're also going to be in a wait and see mode.
Chris, before we go, this is a theme you've sounded before, that you feel the housing policy should be directed to the people who actually live in homes.
Yes.
And all tenants or purchasers, and not short-term investors or
Correct.
speculators.
Yes, no, absolutely. I think that one of the challenges we've had, especially in hot markets like the GTA in the past, is we had so much speculation that we weren't catering to the actual, upward mobility of Canadians and young Canadians. And what we need for public policy is we need at all levels of government to make new housing cheaper, more affordable, and we really need to encourage that it's easier for people to buy homes, it's easier for people to mortgage homes, and we want home ownership in Canada. As Beata said, it drives our economy.
Or rent homes. I
Or
mean,
rent.
it's not.
Absolutely.
Yeah.
No, we're
yeah.
big proponents of rent. We own a lot of rent.
Yeah, you want people to be able to afford to live, but primarily you want people to be able to afford to buy again. It's like it's a fleeting dream for some Canadians that they're going to be able to own a home. Sure, some people will be able to get into a condo or a townhouse, but the dream of owning a home with a yard in a nice neighborhood with a dog, kids, right? Like that, that old verbiage of the kids driving or riding around bikes, playing street hockey, stuff like that. Like you're not seeing it nearly as much anymore because a lot of those people can't afford to get into these houses anymore, right? So it's it's a dying time. So we need to try to bring that back. We need to allow people to get into some houses again, and we need to allow people to build some houses again.
Rental properties across the country. And again, the governments have started to make moves to make rental more affordable and to make new rental easier to finance as far as building new rental.
I think we'll have to leave it there. Thank you very much indeed, guys. That's Beata Caranci, Chief Economist and Senior VP at TD Bank Group. Beata, thank you very much indeed for joining us. And our other guest.
Well, that's pretty much it. Yeah, I don't have anything else going on for today. Seems like most of the stuff kind of happened earlier this week. Yeah, I agree with that. I think once those interest rates once the effect of the interest rate drops get into the economy, hopefully we'll see a little bit more consumer confidence for the start of this year. We noticed, a little bit more action coming into the end of the year, even though they said that, prices were to have dropped at the end of 2022 here. Let me see. I believe they said that prices year over year were down like 5% or something like that. Yeah, compared to November. Oh, sorry, December to November. So sales were down, but they were higher than they were. Yeah. Hopefully we'll see some action. I just want people to feel like they're not getting screwed over anymore, and I want the government to stop introducing policies and things that kind of put just downward pressure on people. Mistakes were made, I'm sure, but harming average Canadians is just not the way to do it. It's been too damaging. I feel like we need a little bit of a reset. So anyways, thanks so much for tuning in. Sorry today was a little bit of a boring one, probably not too much to clip out of this one, but yeah, tune in again tomorrow, 8 a.m. We'll be here. Hopefully something interesting happens. Until then, stay busy in the hizzy.